to invest and like make some reasonable profit at the time of IPO. Okay, so in order to invest in IPO shares, okay, you want to basically understand what is IPO and what are the strategies normally followed by these IPO companies. Okay, that will help you or guide you to invest in the future when IPO is uh, uh, introduced in the market. Okay, so we'll just start from the basic. So you want to understand what is IPO. Okay, see, an initial public offering or IPO, as it's most commonly called, is the process by which companies go from private to public and sell shares in their firm. See, already, like in my previous sessions, I've given you example like if you want to start a business, what are the different sources of funds available? Okay, what are different sources you generate money for your business? That point, I hope you remember, we discussed with few examples. There are different sources, like say, for example, shares, bonds, debentures, retained earnings. I have explained to you. And in that, very important one is through shares. Okay. And I have explained to you also 51% and 49%. That is majority and minority. I hope that also you will remember. Okay. So majority and minority, like 51% and 49%. Okay. So, and I told you, if tomorrow, if you are going to start a new business, right from tomorrow, it is not possible for you to collect money from the public. You want to be in the market for at least 3 years, okay, and some reasonable turnover. There is some restrictions in the turnover. If you produce this turnover, if you show these turnovers, you will be listed in the stock market. Say, for example, in the case of Dubai financial market, if you're going to start a new business in Dubai tomorrow, next day itself, you cannot go and list your shares in DFM or Abu Dhabi Stock Exchange or even in Nasdaq. It is not possible. Okay, you want to show your progress, you want to show profit for continuous 3 years. Okay, based on that, from third year, once third year is completed, from fourth year onwards, you can list your shares in the stock market, that is in Dubai financial market. Okay, when your company is listed in the stock market, automatically public will start buying your company's shares. So this is the normal procedure. See, these points you want to be very clear in order to understand the entire concept. Okay, once again I'll repeat.
Recording in progress.
You know very well there are different sources of generating money for an organization. Even if you are going to start a business tomorrow, what are the ways you will mobilize funds for your business? So one is through shares, bonds, debentures, and retained earnings. Okay, retained earnings is the last option. It is not possible with every company. So the standard sources are shares, bonds, and debentures. Okay, say for example, let us imagine like we are going to start a business. So immediately it is not possible for you to start collecting money from the public. Okay, so you want to be there in the market and you want to show the profit, and then you can list your company. You want to do that listing process, then you can start. Once you listed your company in the stock market, then public will come and purchase your shares. See, that is the normal procedure. Okay, so initially what you will do, no, like you will buy, you will be getting investors, isn't it? Okay, so that is why I used the word called companies go from private to public. Private in the sense you and your family members alone have invested. Now we are going to collect money from the public. So public will act as investors. So when they are investing in your company, what you're going to give to them, you're going to sell your shares to them. So this is the process how this IPO is normally initiated. Okay, IPO don't happen overnight. See, this is the point you want to be very clear. Okay, and they take a lot of effort to put together. That is what I have mentioned in the topic also. There are some lengthy processes there. Okay, to initiate and complete this IPO. Okay, it is not an overnight process. Okay, within 1 or 2 days, like I decided to go for IPO. I'm having enough profit. Let me go and list my company. It will not happen immediately. That is overnight. There are lots of procedures to be followed. So today we are going to discuss what are the procedures involved in this IPO. Okay. See, if a company wants to sell shares to the general public, it conducts an IPO. See, first time. See, first of all, what is IPO? Initial means first. Initial public offering. See, the name itself will give you clear-cut explanation. Okay, initial public offering in the sense first time the company is issuing shares to the public. That's it. Very simple explanation. IPO is nothing but the company, whatever may be the company, they are so far they have not issued shares to the public. So this is the first time they are going to issue shares to the public. That is the explanation for IPO. Okay, I hope it is very clear for you to understand this concept. Okay. Um, okay. Now, by doing so, a company goes from the status of private to the public. Okay, I told you just now. Private companies can have shareholders, but they are few in number. That is what I told you. Everybody will be from the relatives, maybe from our family, friends. Okay, from family itself. Okay, there will be very few numbers, and the firm are not subject to regulations by the Securities and Exchange Commission. So I told you there is a regulatory body in case of Dubai financial market and even other foreign market. There is a regulating body called as SEC, that is called as Securities and Exchange Commission, called as Exchange Commission. Okay. Okay. Right. See, an IPO usually takes 3 to 4 months from the beginning of the first day's trading on exchange. Okay. So I told you just now, it is not an overnight process. Okay. It is taking around 3 to 4 months of time to start the process and complete the process. And the first trading day in the sense, the first day when it is listed in the stock market, it takes normally 4 months. Okay, 3 to 4 months. All right. See, if I want to give you some information related to Dubai financial market, see in 2022, okay, there was a IPO conducted in Dubai financial market, like Dubai Electricity and Water Authority, DEWA. Okay, Dubai Electricity and Water Authority, they gone for IPO. Okay, and you want to understand why companies are going for IPO. I hope you know very well. Companies are in need of money. Okay, imagine, see, you imagine from your own case, you imagine like the company where you are working, or imagine you are doing a business. 3 years you made a continuous profit. Now, fourth year, like possibilities are there, you can just go for IPO. So now there is you want to analyze whether there is a requirement for going for IPO. Requirement in the sense, if your company is in need of money for expansion, okay, or for the growth of the company, or to come out with some new product. Sometimes organizations may require money. Okay, so again, it is not possible for them to generate in the sense from their family members. So they are calling the public to come and invest. That concept is IPO. Just now I explained to you. So whenever a company is going for IPO, there will be some need for cash. That you please don't forget it. Okay. Now, in case of this DEWA, Dubai Electricity and Water Authority, they listed in the Dubai Financial Dubai Financial Market in the year 2022. Okay, they were raising around 22.41 billion. That is around $6.1 billion. They generated money from the public. Is that clear? Okay. And say, for example, another company which went for IPO is ADNOC. Okay. You know very well about ADNOC Drilling. Okay. Listed on the ADX. ADX is nothing but Abu Dhabi Stock Exchange in the year 2021. Okay. They were raising around 3.67 billion. Okay. AED. And in terms of dollar, it is around 1 billion. They have generated money from the public. All these are public money. All these are public money. Okay. And one second. Right. See, all this money belongs to the public. They have invested in your company. Okay. Now, I would like to give you one more information. I thought of giving you at the last. Okay, but this will help you now. Okay. Um, see, um, next future IPOs. Okay, future IPOs. Some companies are planning to go for IPO in the future. In that, first one is like Lulu Group. Okay, you are very much aware about Lulu Group International. Okay, they are planning. It is like a hypermarket chain. Okay, in the Middle East, they are planning to raise around dollar 2 million. Okay, in Riyadh as well as in UAE, GCC countries, they are going to plan for this IPO. Okay, okay. Then Spinneys, I think you have heard about. Okay, and they are planning to go for an IPO. Okay, and Alpha Data. Okay, and very important thing is like Etihad Airways also they are planning to generate around $1 billion. Okay. So like this, the list is very big actually. Okay, the list will be keep on going. Now I'll tell you what is the advantage. Okay, what is the advantage in naming these companies like why they are going for this IPO. Okay, before that, let me complete this explanation. So then finally you will have some idea. Okay, right. Coming back to our explanation, why companies go for IPO. That means why does a company go public? Okay. First, see, you just go through the highlighted point, which is in red color. That is more than enough for you to understand. First one is money making move. That is what I told you. Every organization, if they are in need of money, whatever may be the reason, they'll just go for IPO. Okay. Their idea is to raise funds. That's it. Okay, so this is the first point you want to make it very clear. Why companies are going for IPO means they are in need of funds. Okay, then what they will do with that funds normally, they will reinvest in the business. Okay, for the uh, uh, better company's infrastructure, or they may expand their business. They may open some more branches globally. Okay, or they may come out with some new product development. They have identified some new product. They feel like this product is having good demand in the market, but they are having very less funds, lack of funds. So they are planning to raise funds from the public. So for that purpose, some companies may go for IPO. Okay, so for infrastructure development or for expansion purpose. Okay, or maybe new product development. Okay, third one, an added benefit from issuing shares is that they can be used to attract top management candidates through the offer of perks like stock option plans. See, first two major things. First one is money making attempt, and second one for what are the purpose, what are the different reasons uh, for reasons they want money. That also I have mentioned. See, third one, apart from these things, see some organizations, say for example, just now I told you about Etihad Airways, okay, or Lulu. Why they want to go for IPO? See, sometimes the employees who are there in the strategic level, you all know what is strategic level. That means the employees who are there in the top level, okay, the company is planning to offer them shares. You all know company will be giving benefits to them, like they'll give some housing facility. Okay, and they'll be giving some transportation allowance in the sense I'm saying about they'll buy and give car. The company will offer them a car. Okay, like this, so many benefits will be given to the employees. Actually, these are called as perks. I have mentioned in the PowerPoint. You can see here perks, PRKS. That means additional benefits to the employee. Okay, in that list, nowadays some companies started giving even shares of their company. Suppose, say for example, I was telling you about Etihad Airways, no? So Etihad Airways will be giving shares free of cost to the strategic level employees. That means the people who are working in that Etihad Airways, okay, who are having more number of experience in Etihad Airways, they'll be getting free of shares. For that purpose also, some companies will go for IPO if suppose they are not in a need of money. Is that clear? Okay. And the fourth point is another plus from going public benefit is that stocks can be used in merger and acquisition. I think you have heard about this particular topic called as M&A. See, M&A is nothing but mergers and acquisition. See, mergers and acquisition is nothing but two companies are joining together and they'll be running as a single company. That is called as mergers and acquisition. So, what do you mean by acquisition? Acquisition means purchasing. Suppose, say for example, A company is there, B company is there. If A company is not performing, okay, B company will purchase A company. I hope it is very clear. So this concept is called as acquisition. Okay, say for example, Rank Bank is there, Dubai Islamic Bank is there. Suppose Rank Bank is not performing good. Okay, what this Dubai Islamic Bank will do? No, they will purchase Rank Bank, and now it will be operated as a single bank. That concept is called as acquisition. Merger in the sense, Rag Bank is there, Dubai Islamic Bank is there, like they will merge together and they'll be again running. They will have an equal share. But in the case of acquisition, one company is purchasing another company. That second company will not have any role. Once they sell their company, automatically the roles, everything after getting the settlement is over. But in the case of merger, say for example, one company is profit making, another one is loss making. So they'll join together and they'll try to perform better. Okay, so there is a difference. So mergers and acquisition is very, very, very important. So suppose imagine two banks are merging into a single bank, they'll just go for IPO. Okay, because that through IPO, whatever money they are getting, they will use for the purchase of the another bank. Just now I told you, no, Rag Bank is there, Dubai Islamic Bank is there. Okay, so Rag Bank is suffering from loss. Okay, Dubai Islamic Bank decided to purchase Rag Bank, but Dubai Islamic Bank is in need of money. At present, they are not having enough funds. What they'll do, they'll just go for IPO, they'll get the money. Now they'll just go and purchase the Rag Bank. So that concept is called as M&A, which is normally called as mergers and acquisition. Okay. Next one is there is also the prestige bragging rights for some forms of being listed on a major stock exchange like the NYSE. NYSE is nothing but New York Stock Exchange. So you suppose imagine you are the owner of the company or your company, they are going to get listed in the National Stock Exchange or in the Abu Dhabi Stock Exchange. Okay, so you can feel proud. You can say that my company share is listed. That is a very pride for you, pride for that company as well as for the employees. For that purpose, also some companies will be going for IPO. So these are the points where, like, or why does a company go public? Okay. Now, so I have just given you a basic introduction about what is IPO and why it is important and for what purpose company are going for IPO. Now, we are just moving on to the very in-depth discussion about IPO. So, first thing is that what is the first step in an IPO? Okay, see, don't think like this particular topic is going to be difficult. It is very, very simple topic. You can just listen like a story. Okay, it will be very simple for you to understand. Those who are interested, really interested in investing in stock market, at the end of the session, you will get a good idea about IPOs. So whenever IPO is announced, like you can just invest at the time of IPO. For sure, you will make a profit. That is the right time to invest in the stock market also. Okay, right. Now, so what is the first step? See, the firm going public. we'll just have a example, then only it will be easy for you to understand. See, we'll just take it as a Lulu because very common firm name. Okay, so now Lulu is planning to go for IPO. Okay, now what they will do first of all. Okay, can an NRE invest in Indian company IPO? Yes, yes, yes. It is possible. You can do it. Okay, right. So, what is the first step? See, um, if Lulu decided to go for an IPO, okay, listen very carefully. I told you it is going to be like a story only. The process alone, you want to be very clear. Okay. First thing, Lulu wants to identify a bank. Without banks' support, it is not possible for any company to go for IPO. So, Lulu first hires an investment bank or banks to handle the IPO. So, for any company who wants to handle IPO for them, only a bank. It's possible for a company to sell shares on its own, but in reality, that never happens. So, you may ask a question. So, why they want to depend upon a bank? They can do by their own. Yes, they can. Companies can do by their own. But why they are depending on a bank, you will be coming to understand within next few slides. Okay, right. So first point, Lulu wants to hire an investment bank. Okay, investment banks can work alone. Okay, or together on one IPO with one taking the lead. So who's going to taking the lead from the front? Bank is going to take the lead. Say for example, in case of Lulu's IPO, we'll keep it as NBD. Okay, Emirates NBD is the investment bank. Okay, right. So they usually form a group of banks or investors to spread around the funding and the risk. See, some companies they'll have more than two or three banks also. That depends upon the company. Okay, right. Now, bank submits bids to companies going public on how much money the firm will make in the IPO and what the bank will walk away with. See, bank will simply come and do service for you for any company. That is for Lulu. Will NBD come and do for free of cost for Lulu? No. So NBD will be planning for its own profit. Okay. So the process of an investment bank handling an IPO is called underwriting. So now whatever process is taken care by NBD for IPO, sorry, for Lulu, that entire process is initially called as underwriting. Okay. So now say for example, I'll make it very clear. Now Lulu is planning to go for IPO, isn't it? So there are so many banks are there. Say for example, NBD, RAG Bank is there, Meshrik is there, ADCB is there. So all these banks will approach Lulu and they will be saying that we will take your product and we will generate this much of money. Like that, they will just come and uh, try to uh, project the value. Okay. So out of these four banks, whoever is going to bring more money, okay, Lulu is going to accept them as the investment banker or underwriting or underwriter. So in our example, out of four banks, NBD was planning to one. NBD was committing to Emirates. NBD was committing to bring more funds. Okay, so the process is there now, like followed by the Lulu. Okay, to accept the bank. Okay, that process is called as underwriting. Okay, when an investment by like Goldman Sachs or Morgan Stanley is eventually hired, the company and the investment bank talk about how much money they think they will raise from the IPO, the type of securities to be issued, and all the details in the underwriting. Now see, now Lulu and NBD needs to enter into an agreement. In that agreement, it will be very clear mentioning all these points like how much money they are going to bring. Okay, and what are the type of securities will be issued? Like I told you, it may be shares, bonds, or debentures. Okay, everything will be there in the agreement. That agreement is called as underwriting agreement. Example I have given you, like Goldman Sachs or Morgan Stanley is eventually hired. Is that clear? But in our case, example, like NBD and Lulu are entering into an agreement. Like Lulu is asking, like NBD, like how much money you will pour in or bring in, and what type of securities you are going to deal with. All those things will be in the written format. Is that clear? Okay. Right. What happens next? That is very, very important. Okay. Right. So, what is going to happen next is very, very important in the case of IPO. See, after the company and the investment bank agree to an underwriting deal, agreement and all over, the bank puts together a registration statement to be filed with the SEC. I already told you that SEC is the regulatory body. Okay. So now bank will prepare an application form. Okay, that is called as a registration statement. On behalf of Lulu, Emirates NBD will go and submit to the SEC, that is Security Exchange Commission. I hope this particular point is clear. Okay. This statement has detailed information. What is there in that statement? A detailed information. Okay. Offering on the company information such as financial statements of Lulu Market. I told you no at the beginning, continuous 3 years, your company wants to make profit. That means Lulu wants to make profit. Okay. That oral statement nobody is going to accept. Okay. So for that, financial statements has to be enclosed. Okay. So that financial statement must be there. Management background, who is the owner, who are the board of directors, all this information should be there. Who is the chairman, vice chairman, CEO, chief financial officer, auditors, legal advisors, all these things must be mentioned. So financial statement, management background, and any legal problems. As of now, there is any legal issues with Lulu. Okay, where the money is to be used. Next one, this money, like we want to mention, like how they are going to use this money and who owns any stock before the company goes public. I told you, no, family members will be owning initially. So who are the family members? Each one of them, like how many shares they're having. All these details, okay, must be detailed information must be submitted. That is called as the registration statement, which must be prepared by Emirates NBD on behalf of Lulu and must be handed over to the Securities Exchange Commission. So, who is Security Exchange Commission in the sense? They are the regulating body who's taking care of all these regulations. I hope this point is also very clear. Okay. See, to make it very simple, first thing what I have told you, they want to just hire an investment banker. Okay, then they want to shortlist the bank. Okay, that process called as underwriting. Okay, and okay, that is called as underwriting. Okay, after that, what happens? Like you want to enter into an underwriting agreement. Okay, mentioning like how much money you are going to NBD is going to raise and what are the different securities. Okay, and financial statements must be submitted to the SEC. Okay, and is there any legal issues with the company and about the management deals? Management background. Okay, and where the money is going to be used and who owns any stock previously. Every detail must be given. Okay, right. What happens next? Now the application is submitted. Now the SEC will investigate the company. Whatever information NBD is given, SEC will be like scrutinizing that to make sure all the information submitted to it is correct and that all relevant financial data has been disclosed. Whatever data they want, whether all these data are disclosed or not. Not even a single document should be missing. Okay. If everything is fine, the SEC will work with the company to set a date for the IPO. See, this is very, very important point. See, that is why I told you it is not an overnight. It is not an overnight. It is not an overnight process. Okay, once the company is satisfying all the requirements, now the SEC will sit with the company and they will finalize the date for the IPO. Okay. After SEC approval for the IPO, the underwriter must put together a prospectus. Now, the next story is, now imagine SEC is given approval to go ahead with the IPO. Now, what this underwriter, who is underwriter? Emirates NBD is the underwriter. Now, what this NBD must do is that they want to prepare a prospectus. Okay. So I hope you know what do you mean by prospectus. Okay, simple information about the particular company. That means, say for example, about Lulu. Okay, IPO allocation occurs when investors receives IPO shares. Okay, now the topic is how IPO allocation works. Now allocating shares is important. See, all these things are back office processes. I have explained to you. Now the next part of the story is how shares are allocated. Okay, how the see suppose see very important point. See, I told you no Lulu they are planning to go for IPO. No, see if you are applying for that, see it is not 100% sure that you will be allotted with shares. Okay, they will pick randomly. If you are having luck, shares will be allotted to you. So please try to understand, this is very, very important point. Okay, if you are going to apply for Lulu IPO, okay, it is not 100% sure that once you applied, once you complete all the formalities, I am talking from the investor's point of view. Okay, tomorrow you are the investor. Tomorrow you and me are going to invest in the Lulu IPO. Okay, sometimes you will be allotted. For me, it was sometimes it will not be allocated. Shares will not be allotted. Okay, so possibilities are there. Please try to understand this point. So I'm trying to convey that it is not 100% sure that once you apply, you will be allotted with shares. No, it is not guaranteed. Okay, I'll tell you why. Okay, typically the lead underwriter. See, the lead underwriter means suppose I told you, some companies will have two or three banks, that is underwriters. In that, who have promised more money, that bank is called as the lead bank. So in our example, imagine Lulu, suppose Lulu is shortlisting three banks. Lulu is planning to have three banks as their underwriter. Okay, Rank Bank, NBD, and Dubai Islamic Bank. In that, suppose NBD is saying that they'll be bringing more money, means they are called as the lead bank. Okay, so typically the lead underwriter or investment bank managing the IPO will allocate shares to brokerage firms associated with the IPO. Please understand this point. It is very, very important. So now who's allocating the shares? That is the point you want to understand. See, the company is not allocating. That means Lulu is not allocating. Only NBD is doing that. NBD, it is allocating to whom? Not to the direct investors. It is allocating to the brokers. That means brokerage firms. Shares are allotted to the brokerage firms. These brokerage firms will then distribute shares to the investors. See, this is the normal procedure. Even tomorrow, if you're going to buy MR properties, okay, you will sit in the front of the system and you will purchase. But actually, from where you are purchasing? Only with the support, only through broker, only from broker. Broker will buy and keep all the shares in advance. Okay, and you are buying from the broker only, not directly from the company. Try to understand that point. Okay, so now allocation is prepared by the investment bank. That is, in our example, NBD. Okay, now to whom they are allocating? First, they are allocated to the brokerage firms. The brokerage firms will allocate to the investors. Suppose 10 brokers are there, means like NBD, Dubai Islamic Bank, RAC Bank, ADCB. Okay, so all these banks, for each bank, they may give 100 shares. They will allocate. So these 100 shares, suppose say for example, NBD, these 100 shares, they will allocate to the customers on first come, first serve basis. That's what we are going to discuss next. Okay. Like, I'll just give you one simple example, but it was at the time of IPO. Okay. Indigo Airlines. See, low cost airline, everyone is aware about that. Indigo's parent company that is called as Interglobe Aviation. Okay. They have fixed the price band for its initial share sale at 700 to 765. See, these numbers you want to understand very clearly. Now, here you forget about Lulu's example for some time. You just see only this Indigo. Indigo, like they are planning to go for IPO, okay, and the price they want to fix it. No, see, this price will not be a fixed price. It will be like from this value to this value. So, in our example, from 700 and sorry, from 700 to 765, between 700 and 765, through which it could rise up to 3,268 crores. Is that clear? Okay. So the initial public offer would open on 27th, October 27th. See, already this is over long time back. Okay, just I'm showing as an example. October 27th, okay, they are planning to go for an IPO. Okay, so the IPO opens on 27th and it will close on October 29th. So 27th full day, 28th full day, 29th full day. See, only 3 days will be open. Okay. With the allotment for anchor investors settled for October 26th. 26th itself, all big clients shares will be allotted. So forget about that point. The shares are proposed to be listed on Bombay Stock Exchange and National Stock Exchange. In case of Dubai, it may be listed in listed in Dubai Financial Market as well as in the Abu Dhabi Stock Exchange. I hope this point is clear. Okay. So only 3 days, okay, that IPO will be open. See, that is the point you want to concentrate. Only for 3 days. From October 27th till 29th, it will be opened. Okay. Now, last month, Interglobe Aviation received approval from the Securities and Exchange Board of India. See, when it was UAE or other foreign market, it is called as SEC. As far as Indian market is concerned, it is SEBI, Securities Exchange Board of India. Okay. So, previous month, say for example, in the month of September, they got approval. I told you, SEC wants to give approval. So, like that, in the Indian market, SEBI has given approval for this Indigo to go ahead with the IPO. Okay. So, the preliminary papers for the share sale were filed in June. Okay. See, June, July, August, September only. That is hardly it takes 3 to 4 months to get the approval. See, this is the live example. That is why I'm just taking this. Okay. Now, see the issue detail. Issue open. When it is open, October 27th. This is, see, in the year 2015, it has happened. So, issue open from October 27th to 29th. Issue type is 100% book built issue. I'll explain to you what is that. Okay. Book built issue IPO. Issue size is equity shares of rupees 10 each. Okay. That is called face value. Please don't get confused with the price and the face value. Okay. Issue size is 1,272 crore. Face value is 10 per equity share. Issue price is, I told you, between 700 and 765 per equity share. Market lot, it will be in the lot group only. Like 15 shares. 15 shares is called as one lot. If it is 45 shares, means it is called as 3 lots. Okay. It is going to be listed in Bombay Stock Exchange as well as National Stock Exchange. Okay. The public issue of Interglobe Aviation Limited includes a fresh issue of equity shares agreeing up to this much of, if they want to get this much of money, say for example, 1,272 crores means like how many shares they want to sell. Okay. An offer for sale of up to, see, this is around like billions. okay, they want to sell shares. Then only they'll be getting this 1,272 crores. Okay. Now, an indicative timetable in respect of the offer. See, whenever offer is announced, IPO offer, like it will be like this only. So you want to understand the terms very clearly. Okay. See, bid offer opens on October 5th. Bid offer closes on October 7th. I told you, 5, 6, 7, only 3 days. Okay. When it will be finalized, whether you are going to be allotted or not. I told you, it is not 100% guaranteed. So when you will come to know on October 17th, that means once the offer is closed, okay, after 10 days, you will come to know whether you have been allocated with the shares or not. Okay, if shares are not allocated to you, means the next day, that is October 18th, whatever money you paid, it will be refunded to your bank account. Okay. Credit of equity shares, credit of equity shares to demat account October 8th. Suppose if shares are allocated, means shares will be credited to your demat account. Okay. If shares are not allotted, means money will be credited to your account. That's it. Okay. And commencement of trading of the equity shares starts from October 19th. When it is going to be traded in the platform in the Dubai financial market, say for example, from 19th onwards. 19th onwards, public can view that shares. Okay, public will start buying it. Okay, if more demand is there, prices will be increasing. I'll tell you that process. That is very, very important process. Okay, so I hope this particular timetable is very clear. So whenever any IPO is called, tomorrow in future, I'm talking about future. If Lulu is going to call for IPO, I told you no. So if you see the newspaper, okay, or you'll get an advertisement like this. So you want to note down all these important dates. Okay. Now you all are aware about Zoom video communications. Okay. Zoom raised around $356.8 million in its IPO, with existing shareholders selling additional shares. On Wednesday, the company priced shares at $36 above the top of its most recent range. The stock traded as high as 66 on Thursday. When it was opened at the Wednesday at the price of $36, Thursday it went up to $30 more, that is $66. Okay. For the IPO, investors who bought 278 shares, a total of $10,008. Those shares have zoomed up to 83%. That is dollar. Suppose if you have invested $10,000, means you are getting $18,000 back. That is around $8,000 profit. Whoever invested in the Zoom IPO. Imagine you are purchasing 278 shares. Okay, so this is an incredible market beating performance versus the S&P 500 Standard and Poor 500 index, which only gained 13% over the same period. Unfortunately, public investors like myself haven't fared as well. Okay, the stock has been a roller coaster ride, but never provided an opportunity to buy below the IPO price. See, roller coaster, you know the meaning. Okay, keep on pricing, like jumping here and there, and like a common investor, like public investor, like you and me, who have missed in the IPO, we will be buying when it is started trading in the market. So what we will do, we are waiting for the price to come down below the IPO price, but it was not coming down because it was a roller coaster. It was keep on, the prices are flying like anything. That is the meaning. Okay. A public investor with perfect timing could have bought at the low just under $60 and would be sitting on a gain of around 10%. If you can purchase at the rate of 60, that is IPO price. Okay. It is obviously you can get up to 10% more profit, you can just get it. Okay. Now, most other investors are in the red, but it's still early for this young upstart. Sometimes you might purchase at the higher price. Now the price has been reduced, so it is in red. That means you have made loss. But now, no worry, you can just hold it for a longer period. For sure, you will be gaining profit. Okay, right. Okay, I hope this particular point is very clear. See, we were talking about Zoom price was around $36, $60. See, it went up to, recent information I'm sharing with you, it went up to $92.80. Okay, and currently it is trading at $77.78. This is the today's information. Okay, the Zoom shares went up to high of $92.80, and as of today, 52 weeks means in a year. Okay, for the past 1 year, $92 is the highest price, and as of today, the price is around $77. I hope you remember when I was teaching you stock market, you want to study 3 months average price, and you can decide whether to purchase or whether to buy or not. Okay, so according to me, this is the right time to invest in Zoom because it is going to near this 92, which is 52 weeks high. If it is going to cross this 92, it is going to make a new record. So you can invest, okay, 50% of your money you can invest in Zoom now. This is a general study about the current situation of Zoom. Okay, right. One more company's information that no need. I have already given you two examples. Okay. Now, I told you, no, I'll be explaining to you this book value and all. So there are two different types of IPO issues are there. Okay. One is called as fixed price issue and another one is called as book building issue. Okay. Fixed price issue means the issuing company determines a fixed price for the issue. Book building issue means the issuing company discovers its price using the book building process. See, fixed issue price. Say, coming back to Lulu now, forget about all this Zoom and Indigo. Okay, now come back to the Lulu example. Lulu, like they are left with the two options. If Lulu is going to decide the price, that is called as fixed price issue. Lulu will decide. See, I know about my company; they are having a good demand, so I am going to fix it for, like say for example, 100 dirhams. One share is 100 dirhams. If Lulu is deciding, that is called as fixed price issue. On the other side, if Lulu is saying like we are not fixing the price, let it be like book building issue means that is the process I'm going to explain to you now. What is that book building issue? Okay. See, book building is actually a price discovery method. Please don't forget this word. Book building is nothing but price discovery. You want to understand what is or how much demand is there for Lulu. In this method, the company does not fix up a particular price. I told you, no, for the shares, but instead gives a price range of between these to this value. Say, for example, if it is fixed price, I told you, no, Lulu is going to fix at 100 dirhams. But if it is book building, it is going to have ranges from this value to between this value to this value. Say, for example, between 80 dirhams and 100 dirhams. Okay. When bidding for the shares, investors have to decide at which price they would like to bid for the share. I think you know about bidding concept. Okay. So they want to bid the shares, for example, 80 dirhams, 90 dirhams, or 100 dirhams. They can bid for the shares at any price within this range. From 80 to 100, within this range, you can bid. You can say 80, 85, 90, whatever it is. But 99% of them will go for the highest value, that is 100 dirhams. Then only shares will be allotted to you sometimes. Okay. Based on the demand and supply of the shares, the final price is fixed. The lowest price is 100. So out of this 80 to 100, what is the lowest price? 100. What is the highest price? That is, lowest price is 80 and the highest price is 100. Please try to understand. The lowest price 80 is called as floor price. Everything I've given in the slide. Okay. The lowest price is called as floor price and the highest price is called as the cap price. Okay. So the price at which the shares are allotted is known as the cutoff price. This three price you want to understand. Value is between 80 and 100. 80 is called as for floor price because being less. Okay, 100 is the highest price called as cap price. Cutoff price is nothing but if the value is fixed between 80 to 100, I told you, no, if the value is fixed at 95, that is the final price. That is called as cutoff price. I hope this is clear. Okay. See, how do underwriters make their money? Coming back to our example, how NBD is going to make money. A bank or group of banks, I told you, put up the money to fund the IPO and buys the shares of the company before they're actually listed on a stock exchange. Now, understand this process very clearly. First, what NBD will do, no? NBD will buy maximum shares of Lulu. Try to understand this point, please. Say, for example, price is 100 dirhams, I told you, no? NBD will purchase maximum shares from Lulu for the price of 100. Okay, now what happens? The banks make their profit on the difference in the price between what they have paid before the IPO and when the shares are officially offered to the public. See, now NBD purchased for 100 dirhams. Okay, when the share is listed in the market, suppose if it is going to open at the price of 150 means now what happens? NBD purchased at the price of 100 and they are going to sell it for 150. So per share, NBD is going to get a profit of 50 dirhams. I hope this particular point is very clear. So in such a way, NBD will make money. Okay. Competition among investment bank for handling an IPO can be fierce. Okay, that is why all the banks will come forward and arguing or bargaining with the companies, different companies, like we'll take care of your IPO because they're going to make lots of money, especially this investment bank. Okay. What part of an IPO is a roadshow? Whenever we talk about IPO, I think you might have heard about a word called as roadshow if you're very familiar. So, what is this roadshow? See, to try and drum up interest in the IPO, the underwriter takes the prospectus and present it to the prospective investors. Now, listen very carefully about the story what I have told you till now. Now, recently I told you NBD purchased from Lulu at the price of 100 dirhams, one share. Now, what NBD will do, no? I told you earlier they'll prepare a prospectus. So now NBD will take the prospectus and they'll just go around this world, okay, to meet the prospective buyers. That is actually called as roadshow. They'll just go and visit all the different countries or places. These can be trips around the world. Thus, the name roadshow, or can be a video or internet presentation also. It depends. Sometimes NBD officials will be traveling to other countries or they can do a video presentation also. Okay, if a prospective investor likes the IPO, underwriters can legally offer them shares at the price they eventually set before the stock is listed on the stock exchange. This is called as IPO allocation. It's a wonderful point. See, imagine NBD now they are going to US and they are conducting a roadshow. Now in US, imagine like they have a good impression about Lulu. Now they are very much interested to purchase the shares at the price of 150 or 160. Immediately, the stock is even not listed. Okay, I told you, only if it is listed you can purchase. But before listing itself, NBD will sell the shares to the US people and they'll make money there itself. Actually, this is called as IPO allocation. Road shows are usually for the bigger institutional investors. See, don't like that. Don't think like road show means they'll just go by the roads and they'll do marketing. No. NBD will go, that is what I mentioned the last point. They will just go to the bigger institutional investors. That means corporate companies who are going to invest in bulk. So NBD will go and visit them. Okay. So this particular point is called as a roadshow. Okay. How is the price of the IPO stock determined? As the IPO date comes closer, the underwriter and company decide on the price. This can be depend on the company, the success of the roadshow, and the current market condition. See, now NBD they went to USA, they sold some shares there, and they came back. Now it is the turn to discuss with the Lulu, and they want to fix a date for the price for the IPO because in UAE they want to launch this IPO, no? So for that, they'll decide the price. So whatever price offered in US, they cannot sell it here, isn't it? That is obviously not possible. So now NBD will be saying to Lulu, like we went across the world, like there is a very good demand for your brand. Okay, so you can fix it at, say, for example, 170 dirhams. So that price will be shown in the first day of the trading. See, not only that price, even they want to see about the market condition. Suppose if it is a very big recession, or if suppose if it is COVID is there, no point in giving for the higher price because nobody will come forward to invest. At the same time, the price must not be too costly also. Is that clear? Okay. What determines which exchange gets a new stock listing? Like underwriters, stock exchanges such as NASDAQ and New York Stock Exchange, Dubai Financial Market, Abu Dhabi Stock Exchange wants business of an IPO, because even stock exchanges are going to make money out of this IPO. So everyone will be interested in saying that you come and list shares in our exchange. That's because it could lead to more trading and future business from other IPOs. Why what is the benefit these exchanges are going to get? Because when a very branded company is listed in their stock exchange, again so many in the future so many companies will come forward for IPO. That is the motive. Also the prestige of having a famous company listed in their stock exchange. Okay. So, like normally, this is the process for IPO. Okay, so whenever there's an IPO, if it is a very good branded company, you just try to apply. Okay, because when you're going to buy at a nominal price, when it is opened on the trading day, the price will be at least 20-30% more. On the first day itself, if you're selling, you can book the profit. Or otherwise, if you're waiting for 1 week or 10 days, for sure you're going to book the profit. Okay. So that's it for today's session. In case of any doubts or clarifications, you can feel free to clear your doubts. And once again, thanks for the opportunity. So in case of any doubts or clarifications, I already given my mail ID. Whatever doubts related to investment or financial products, you can just put a mail to me. I'll try to sort out and I'll try to give you enough explanation. Okay. Once again, thanks for the opportunity.